Hello, everybody. Welcome to the Trader Merlin Show. It is your, I don't even know what day it is anymore. I thought it was Taco Tuesday, but it's not. Is it? It is Tuesday, isn't it? It is Taco Tuesday. It's National Beer Day, and I didn't even have beer on hand. Maybe that's why I forgot what day it was, because maybe I had a couple beers earlier. The perils of working from home. Guys, we're going to have a great show today. We've had Tim Pesut on the program in the past on Power Trading Radio. This will be his maiden voyage here on Trader Merlin, so we're going to do a little bit of a trader profile. Then we'll talk about some of the current market situation happening. So we got a lot going on with those currency or commodity currencies like the Canadian dollar, Australian dollar, even things that are normally the safe havens that don't have too much volatility like USD JPY, showing great moves out there, and there are some tremendous opportunities. So we'll talk about Forex today. For those of you who might not be familiar with the currency markets or Forex, don't worry, you're all trading Forex every single day, whether you buy products from a store or online. You're buying something that came from China, and generally there's a conversion of currencies there without you really even knowing it. So yes, you are all currency traders. Let's make some money off it. So we'll start with that a little bit. Let me go down the normal path, which is talk about our market update. Some very interesting things happened today with regards to market direction. We'll see if that transpires into tomorrow's session. We'll start things off with your worst performer out there. I am still holding one contract of crude. I probably should have sold it last night, but I'm believing in the long term, so I am about break even right now on that bad boy. That was your worst performer out there, so I'm going to start everybody off with the crude oil chart. Here's your CL on the day. You can see that big red candle forming today. Yesterday it was down 7%, but the candle didn't really reflect that. Today you're down another 6%, so it was down 6.25% on the session. That's $1.63 per barrel of crude oil, bringing it down to $24.45, which it's right about there right now, about $24.41. So all in all, not a great day for crude oil, but again, I'm definitely thinking longer term. And yeah, I always forget, by the way, a shout out to all of our regular viewers out there. You guys are awesome. Natalia, Kev, Mark, Gretchen, Gayer, Marco, Sam, Jorge, Siraj, hello, Big Eb, of course, Vernon as well, and I'm pretty sure... and Brandy, you might be new there. And Gino, Medic Man Down, awesome. Love having you guys out there. I will do my best to monitor the quotes and questions coming through here. Merlin, that light wall in the background, you would look better in dark shirts. Mark, you get to be my fashion designer. Well, I'll try to wear more dark shirts. How about I just wear no shirt at all? I'm kidding, totally kidding. All right, crude oil, that's your worst performer out there, down 6%. It's definitely a more normal day with regards to returns, right? We had a crazy day yesterday with percentages. Today, not so bad. Bitcoin brings in number 6 with a 1.72% slide. Most of that coming in the last hour or so. You see a really sharp drop here in Bitcoin, starting at about right around 1 o'clock. 7,122, so still looking rather good on the Bitcoin price chart, at least from the longer term perspective. And that's number 6. All right, back to number 5. We're going to bring me to gold. GC dropped down below that 1,700 mark, but you can see right there, it did breach above it. It opened up, got much higher. Actually, ultimately, during the trading session, we hit a high on gold today of 1,742. Has not seen that price for quite some time. All in all, a good day out there for gold. 1680s where it's at right now. Again, that is a slide of 0.71%. All right, NASDAQ Composite, NASDAQ 100, as I wrap up our numbers here, we're back to 8,000 on the NASDAQ 100. Actually, on the dot, 8,000 on that one. That is a slide of about 0.33% for the NASDAQ. And really nothing technical other than we do have the potential makings for a down day tomorrow because of the shooting star pattern you're seeing here on the NASDAQ. I'd be inclined to think that we would see some sell-off here as that tail today rallied up into that area of supply. And hello, we got some old friends of mine, guys. David in here. I actually went to high school with this guy. Welcome, David. He's an actor out of Los Angeles, so good to have you with us. It might be your maiden voyage on this show. Thanks. And James Lovelace as well. Sheena, you guys. Terry. We got a bigger group. You guys are growing on me. The group's growing anyway. All right. That's your NASDAQ. I'm going to go into your top, 3 here with the S&P 500. I am presently short 3 S&P futures contracts. Why? Check out the chart. This is a very bearish sign, just like we saw with the NASDAQ. Things were looking great. Optimism was pouring into these markets, albeit not with the greatest volume. All of a sudden, we get the shooting star pattern today, which does imply a selling pressure move at the end. I'll show you that here in just a second. That does, to me, mean we're going to see some downside moves tomorrow, which is why I am short 3 contracts as we speak. I want to show you one thing that's noteworthy here on this S&P chart. Check out this 1 minute candle. Let me see if I can bring up the 1 minute time frame on this bad boy. I want you guys to see the 60-second move today that was just absolutely bonkers. Here's this big red candle right here. This is a 1 minute chart. So in 60 seconds, the S&P 500 went from a high of 2697 to a low of 2660. That's a 37-point move, and that's not even including the moves back up. So you had like a 45-point move in 60 seconds on the S&P today. That was brutal. What was interesting about this one, for those of you who say supply and demand doesn't work, and that annoys the hell out of me, if you look at just right at this line right here, this is a 1 minute chart, right? I'll put the blue line on your screen. I will zoom out, and you guys can see where did we hit today? Right into an area of supply that goes back to yesterday's or early this morning's trading session. So supply and demand works, people, just not all the time. Yeah, Marco says Hassan and jumped off the chair. Yeah, I was actually pretty excited because at that point I was short, but it was a good time to be short. All right, that was number 3. Number 2 brings us to the rut. Russell 2000. Also, this is the 1 minute time frame. Let's go back to our daily. That's the bigger picture. On your daily, you're looking at a similar picture, although remember, I was talking about the inherent weakness of the Russell because it has not been able to get above those most recent highs. It did today, just on the topping tail, and then proceeded to drop to the south side and show some weakness. So all 4 of our indexes, NASDAQ, S&P, Russell, and Dow, all showing weakness, and that could transcribe into shorts for tomorrow. Okay, number 1 brings up our ZN, and then we'll get to Tim Pesut here and talk Forex. I was actually anticipating this 10-year Treasury note futures continuing to rally up to that 0.5 mark, right? Well, we're dropping in yields to 0.5. Today, we didn't get that. We actually got a spike in yields of 8.88%, bringing the yield on that 10-year Treasury note to 0.736, much to the dismay of many people out there who are looking to refi their houses today. Okay, I guess we can dispense with the market update. We are done with that one. I want to make sure we get to our guest who's been patiently waiting on the phone. He's out in, I'm assuming in Florida today, as Florida finally quarantined their citizens as well. So today we're going to have Tim Pesut on the program. Tim, how you doing today?
I am doing great, Merlin. How about you?
I'm fantastic. I'm actually really starting to love this quarantine thing. Except for the lack of social interaction, I'm enjoying it today.
It is, because it kind of gives you a new perspective. You can't really go anywhere. Fortunately, they haven't cordoned off the beach, so having the beach right there, actually, I consider myself pretty fortunate.
So they haven't cordoned off your beach? Because I know I was talking to Brendan Wendell, and they did for their beaches.
Nope, because we're kind of off the beaten path, not real close now, like Cocoa Beach, which is down about a mile. They've done that because that's, where everybody goes, but, over where the subdivisions are, where I'm at, don't get as much traffic, and any access that was nearby for the public, the sheriff's department's put all kinds of barricades, so we're fortunate.
Nice. Well, I'm hoping that you can continue to enjoy some of that beach weather. Let's just dive into some market stuff here. I want to get a little bit of an update on who you are. So I'm going to do a little bit of, I think I actually have it here. Let me see, where did I put this piece? I just created something for us, and I don't know where I put it out there. It was a trader profile, but there we go. So I'm going to start with this right here. This is our maiden voyage with Tim Pesut in the program, so we'll call it the trader profile. What we like to do is when we have guests on the show, give our viewers a little bit of an understanding of who they are, how they operate, maybe what are some of the things they like to look at in the financial market. So Tim, give our viewers who are new to Trader Merlin a little update about yourself, your background in trading, and kind of what your style is and what you like to trade. It's a lot there.
Okay, Wall Street trained, did some, well, I guess I could say time, but spent quite a bit with Smith Barney, then ultimately Lehman Brothers. And Lehman Brothers is where the entire market's just opened my mind. It was interesting how things operated. I started just at the end of what they call non-negotiated commissions, believe it or not. So what that means is when I originally was an investment broker, they didn't call us stockbrokers at that time, is if you did a transaction, the commission was actually based on the entire dollar amount. And I think for about 3 months, it was around 3% for me. So think about that. You put in a $100,000 trade, the commission's almost $3,000.
Crazy.
Then I went through the whole, Chuck Schwab went to the 35, and then it got even lower. And then right around 2003, 2004, just kind of got tired of the whole Wall Street aspect. It's interesting when I meet people, they say, well, gosh, as, being in Wall Street, especially at a firm at Lehman, you must do phenomenally well. And actually, I was quite, this will be interesting, disabled. And what that means is, even though you could execute well for the firm, you were prohibited from executing in your personal account.
Yep.
Because there was always concern about insider trading. So by the time I could do anything in my personal account, it would be maybe 6 to 8 weeks before compliance would approve it. So it was very, very difficult. And then, of course, when I went out on my own, I thought, oh, I got this. And I found out within 4 months I didn't have anything. Actually, the market had me, more or less. So when Lehman went under, since the bulk of what I had was with them, I basically went the same route. And so I went through some books, I did some internet stuff, really didn't do well, and then I just, for some reason, a buddy of mine was talking about Forex, and I said, what do you mean Forex? He goes, foreign currencies.
Right.
I go, oh, so I have to do the conversion? He goes, no, you can trade those. I go, well, why didn't I hear about this before? He said, well, prior to 2002, it was illegal for a U.S. citizen to trade spot Forex markets. So we went to this workshop. It was a piece of software. So I decided to grab hold of it. Did well for a couple of years, not realizing I basically got lucky. And the lucky part, interest rates were high, and these markets were trending. I remember one specific trade I had in the Aussie-US dollar that just quietly just kept going up for 18 months.
Ooh, wow.
And the beautiful part, and I was getting this interest correct. Now, this is going to kind of show you how naive I was. I was like, oh, so I'm getting this financing thing. That's pretty cool. And then I noticed on Wednesdays, I was getting 3 times as much. Because at that time, the Aussie was paying about 11.5%.
Right. The glory days of rates.
Oh, I'm just enjoying it. And then it finally dawned on me, I should probably find out what the financing was about. And it was kind of an accidental introduction into the carry trade, where because the Aussie was paying more in interest versus the U.S. dollar, I was actually getting paid nicely every day to stay in a trade that was going in my direction. And so Forex just made so much more sense to me because of these nice long trends. And so I became not a day trader. I tried day trading, but I found out my account was getting chewed up, could not figure why. It was just like a ping pong ball. However, my entire time frames, 4-hour charts, daily charts, was so much easier, and I enjoyed the aspect that I just had to check on it periodically.
Right.
So from a Forex standpoint, I tend to be in trades for days to weeks.
Okay. So
tried the scalping for day trading, just doesn't work. Then when I found that the odds are so stacked against you,
right,
because all these firms have these little algorithms that they just take out the retail trader, that I stayed with swing trading. I did fairly well. Then 2008, 2009 hit, and then the market that I had known changed dramatically. For some reason, I couldn't catch a trend. I didn't really understand what was going on. And then I realized it must have something to do with interest rates. And then I went from doing fairly well to not so well. And then I decided, you know what, I've got to find some way to do this better. And I dabbled a little bit in futures. Didn't work out so well. And then a good friend of mine, who was a trader on the Chicago Board Options Exchange, because we both lived in Chicago, said, hey, you should get trained. I go, okay, well, where do I do that? He says, well, I'm actually doing some training for a company, which turned out to be Online Trading Academy.
Cool.
And then when I got formally trained there, I was better. But what really excited me for intraday or daily was futures. And then I basically started futures in 2013. And from that point, I have not looked back. So when the market fell apart, and it's interesting, I went to cash personally the end of about the third week in January. So many people will say, well, you went kind of early, and I'm glad I did.
Right.
For some reason, first week in February, it was weird. And then I'd like to say that I had the brilliance to go massively short across the board, but I didn't. But I thought, you know what? Something's not right. And then there was an article, just a real blurb. I do Twitter pretty well, about Princess Cruise Lines. And the article said that they had to cancel 3 China cruises based in China. And it was going to cost them $4 million per cancellation, and it was going to hurt their bottom line. So I got to thinking, wow, are their margins that thin? And if this potentially is going to cause that, I said there's probably going to be a big spillover effect. And sure enough, a couple weeks later, we had this start of a big downdraft. Things start going negative. And when I look in hindsight, I could have gone short massively, but I was only short a little bit, and I'm okay with that. And then I was tempted many times when you have these big moves just to jump on board. However, because of my training, I learned not to, because just as much as it was ripping down, when it sprang back up, it was cleaning people's clocks, and the spreads were massively different. So your stops that you could rely on during market hours weren't as effective.
Mm-hmm.
So now, just focus on my supply zones, my demand zones, like I've been extremely well trained on, and I really wait the trade to come to me. Now, while I've been really excited to potentially switch to the Globex, 7 o'clock, 8 o'clock at night, to do the S&P, which is, like you, I'm not 3 contracts on short 1. It's nice when you see those big moves.
Sure.
But I also know those big moves don't really have a lot of follow-through, which we saw today. If you take a look at last night, we moved over 100 points. But when we look at it, it was extremely small volume, which means it was really these trading firms hedging themselves, not actually taking positions.
Right.
And sure enough, when normal volume returned, whatever normal volume is these days, we basically, the last I saw, gave back 99 of those 100 points.
Right.
So I don't see right now the market is having legs. A lot of people are saying, oh, well, now it's going up. It finally hit the bottom. I don't think so. And the bonds are kind of suggesting, I don't see us, we could go higher, but I don't see that the bottom's in. Because keep in mind, who's the bond market now? Used to be institutions.
Yep.
The bond market is really the Fed right now.
They are running the show.
And when they run the show, there's now discussion that they might have to do another stimulus.
Oh, great.
So then we look at, they're not going to go negative. They're not going to go negative yet.
Yet. I like that you put that keyword yet, because it's a possibility.
Right. Yes, it is. But here's what I believe they're going to do first. I think they're going to get painted in a corner. Now, as we take a look, the market's kind of briefly gone up. It's kind of a sigh because of the media saying, oh, well, this should be the peak of the coronavirus here. It looks like it peaked in Italy, and everybody's looking for this massive optimism. And I'm optimistic that it does peak. But what's going off in the back of my mind is, okay, how does that change anything with the economy?
Right.
and the economy drives the market. And when folks finally look at it, oh my gosh, what's going to take for things to start to come back? We've got earnings that are going to start, what, about a week?
Yep, next week.
This little optimism may go away really, really quick.
And that's where I'm putting my eggs in that basket. It's funny because my friend David, who joined us today, he sent me a message earlier saying, what stocks would you buy right now? What's hot? And he mentioned some of the things he's buying, and he's got an interesting strategy, which is I'm buying a share of something a day with Robinhood. And everybody needs to understand that there's massive problems with using Robinhood. It just drives me nuts that people are using it, but that's where people start. That's fine. And some of the securities he was looking at buying were like Carnival cruise ships, or Princess Cruises, which is Carnival cruise ships, so CCL. Looking at cruise lines and airlines. And personally, I messaged him back saying, yeah, they might be very cheap right now. I think we had Carnival Cruise Lines up there. Let's see if I can bring it up for you guys. Here is Carnival Cruise Lines. You can see they've just been absolutely slaughtered. Right now trading about $11.30 when it was, $52 just back in early January. The novice would think this is a great deal. Keep in mind that even if we get to the point where we can start to go back out and go into the world again with our government's approval, how many of you want to get on a cruise ship, right? This is probably going to be the last thing on your list. Airlines, we understand, that's fine, but I actually think what you'll probably see by the end of the year is Carnival and others in the cruise ship space file for bankruptcy. So what that would mean is if you are a stock shareholder, you're getting nothing. You're going to get nothing. The bondholders get paid first. So even though you look at something at $11.30, you got to ask yourself, are you okay losing and throwing away $11.30 per share, because it is that cheap and people are drawn to that. So I'm digressing over here. Let's move back towards the currency side of things. You mentioned a few pieces about the currency market that I want to expand on, but I want to get to this question that came in from, where is she? Natalia, you were talking about the carry trade, and I think it might be good to explain that a little bit more. Natalia says, how does interest affect Forex trades? I only know the stock and futures. So understand, Natalia, that you're buying, when you're buying a currency pair in the spot market, which is what we're going to talk about today, you're buying one currency and selling another. That's how it works. And there's that price fluctuation of that currency pair, but there's also the carry trade, which is interest rate. So do you have a basic example you could give us of the carry trade with current rates?
I do. So what will help your listeners to understand the carry trade? The carry trade really is a foundation trade of the banking system globally. What that means is money sloshing across the globe throughout the day. And when you have these big reserve requirements for banks, that excess cash needs to go somewhere to get some kind of return.
Right.
And what's interesting about the carry trade, you don't have to be in that country's currency an entire 24 hours. You only need to be in it before they consider the end of the day, which is 2 p.m.
Right.
And if you're in there, the dollar amount you control is what you get paid on, not the dollar amount invested. And that's where a lot of new Forex traders don't understand how amazing the carry trade is. So for instance, let's just say hypothetically, at one point in the time, the dollar was one of the foundations of the carry trade, the dollar versus the Swiss franc.
Okay.
So with the older interest rates we had, so we go all the way back to December 2018, we were at 250. Swiss franc was a -3/4. Okay? So then you have the 250, you're long the dollar, and the dollar's going against the Swiss. Swiss is down 3/4. Okay, so now you're getting paid 3.25% annualized. That's broken down to where you receive an interest payment every day.
Yep.
If you're long the dollar versus the Swiss. And a lot of us, we only get an interest payment from our bank on whatever we have at the end of 30 days, or if it's a CD, 6 months, or if it's a stock dividend every 3 months. But it's based on whatever the dividend amount, but in a stock, it's very capital intensive, as are bonds. So let's say for me to control $100,000 on the dollar Swiss, they're going to take about $2,200 as a deposit for me to control $100,000. So what if I did $1 million? Well, if I did $1 million, my deposit is going to be $22,000. Okay, just 10 times what it is for 100,000.
Yep.
Now, let's do the interest. The interest I get paid on is not my $22,000 I've invested, which is what most people think. The interest I get paid on is the $1 million I'm controlling.
Right.
Now, here's the really cool thing. If you own it Monday by 2 p.m., at 2:01, you get interest credit for 1 day. If you still hold it on Tuesday, you get interest credit 1 day. If you hold it on Wednesday, you get credit for 3 days. And then Thursday is 1 day, and then Friday is 1 day.
Mm-hmm.
So when interest rates were higher, there would be days I would get $250 or $290 on Wednesday for an interest credit.
Now, and that's that carry trade. They call it the carry trade because basically you're buying something that has a high interest rate and you would be selling something that has the low interest rate. So, for example, if you go back just a couple of, it's funny because we have to go back right now because if you look at the U.S. right now, we'll call U.S. 0 and Japan is negative 0.1. So, what are you going to make? A 0.1% rate of return on $1 million? It's not as substantial as it used to be. But they're used to these rates. Some of them are up at 2-3%, like the example you're making. So on $100,000, if you're looking at 3.75% per year, that'd be $3,700 in interest for the year. But now you got to divide that by what? 365, right? Is it 365 or just it's every day? Yeah. You divide by 365, and that's what you would make on that little rollover. So what's interesting about that carry trade is you could potentially buy a big block just for that small window of time and collect that interest payment. That's basically what you're talking about.
Correct. Exactly. You don't have to wait 6 months or a year. Now, the carry trade is awesome when the market's moving your direction as well.
Right.
So, for instance, in a way, I could get paid to stay in that trade.
Yep.
And a lot of times people say, well, okay, what if I really should be short the currency? And here's the beauty a lot of Forex traders, futures traders kind of overlook. I consider futures currencies and spot Forex as complementary to each other. So if it's a situation where I want to be short because I'm going to make so much more money on the trade being short, however, the country I'm shorting has a lower interest rate versus the country that I would be buying that has a higher interest rate, I would have to pay that differential. And that's where a lot of folks don't like it. Well, instead of me doing the spot market, I just switch right over to futures. Now I've got a really nice short, let's say on the Aussie, which was wonderful last week. Oh gosh, it was just crazy. And there's no interest debit, but then again, there's no interest credit. So I see them as complementary, not an either or.
Right. Well, it's interesting because when you look at it from that perspective, you have two ways, and you have to be careful when we say this. You have two ways you can be making money on this. You have the market appreciation, and then you also have the carry trade interest. That said, this is where it's really important to understand the direction and how that carry trade works, because you might find yourself in a situation where the appreciation is making you money, but actually the carry trade is losing you money if it's done backwards. If you're actually buying something as a very low rate and you're selling something as a high rate, you now are responsible for that difference. It could come out of your pocket. Also, you run the risk of being on the wrong side of something. It's actually depreciating against you as the asset as well as the carry trade. So you have two different aspects you need to think about when you're looking at that carry trade from a Forex perspective.
Correct. And then you always have to consider, all right, if I am a Forex trader and I'm paying interest, which if you were doing that today, it would be pretty much insignificant the way everybody is on to be, just like zero. you want to consider that as far as your reward to risk ratio, because you don't want that to stall, because if it stalls, that interest charge could eat away at your overall return on your risk to reward ratio.
Yep, absolutely. Reading through some of the comments here, I like the stuff. I like what I'm seeing over here, guys. You have let's see. One question comes through. Natalia says, note to self, learn more about the carry trade, Forex 101. Yeah, absolutely. It's a critical piece to that investment vehicle. Sheena also put this one in here, and I'm not one for throwing shade or throwing people under the bus. I feel like people can make their own statements and things. Sheena writes, trend trades worked so good this past few days. I agree 100%. I think it was amazing how well these trend trades have worked both in the short term and intermediate term. There was someone who left Online Trading Academy recently, who I'm trying to be politically correct about, who actually posted on her Twitter today about her YouTube channel and how basically this is why trends don't work. And I'm thinking, who are you? How can you possibly say trends don't work? Trends are the single most powerful thing we can find in the market, and then you work that with demand and supply zones in those trends. That's what we're talking about, opportunity. Anyway, I don't want to mention her name, but boy, just it chapped my hide seeing people saying, this is why we don't do anything with trends. Like, get out of here, beat it. I don't even know what you're talking about. Anyway.
So let's tell all those big institutions that trends don't matter.
Yeah. Let's tell the most successful investment group, probably in the history of financial markets, the Turtles. Their whole thing was about trends. Right? Just
correct.
Anyway, I could go on and on about this. It chaps my hide. Let's go to currencies. Talk to us a little bit about some of the current things going on in the currency markets. I know we've had really wild swings up and down, especially with those commodity currencies like the Aussie dollar, Canadian dollar. Any analysis or take on any of those?
With the Canadian dollar, it was something I want to be careful with, because even though it started a nice little uptrend, as you were talking before, it is very linked to crude oil. And I'm not so sure that this kind of stall is going to last that long, because you've got two big oil market, I call it controllers, the Saudis and Russia, that are in a real snit fit. And that's going to affect the overall trend. Now, I'm a little cautious on the Canadian dollar, even though I do like it as a currency. And I'm also cautious on the Australian dollar, even though that's had some nice momentum to the upside. Why the Australian dollar? Well, the Australian dollar can be pretty attractive because its biggest export partner is China.
Right.
And if people extrapolate, okay, well, China's going to get back to their manufacturing. There's going to start more in demand. That means Australia's economy is going to pick up. The New Zealand economy, which are the two biggest export partners. In a way, yes, but we have to also ask, how far back, how much back is China really at or going to be? Because there's all these questions. Well, did the coronavirus impact them more than what they're saying? Mm-hmm. And that's the biggest thing we have to understand right now, is we don't know how these economies are going to potentially start bouncing back.
It could take a long time. You know, the interesting thing I'm doodling here with the Australian dollar chart. You know, if you go back and look all the way since 2013, actually it goes back, even further, 2011, the Aussie dollar, AUD USD, was trading at about a little over 110, almost 111. And now we are down. Correct. It hit a low recently of 0.55. So what that means is, for all intents and purposes, the purchasing power for the Australians has been cut in half. They're getting less and less U.S. dollars for, which means if you want to go to Australia, now is probably a good time to go travel. Your dollar is going to buy you a lot more.
If you fly.
But we just talked about trends being so critical. You know, there's two things I want to notice on this chart for every viewer out at home. Number one, I'm a huge fan of trends, which I think we should be still thinking short on this one. However, if you look at I've had conversations about climactic volume and how, to me, that is critical in understanding when everybody finally dumps something and there's no one left to dump it, it bounces. I feel like we're seeing that on this weekly chart. We had really high volume 3 weeks ago. It maybe became much more overextended on the sell-off. Do you think that this may be that low point for the Australian dollar, or are we still going to continue that downtrend?
I think we're headed higher.
Okay.
I do. Regardless of what China reports, doesn't report, the chart's just kind of telling me that this definitely wants to go higher. Now, how much higher? A lot of it's going to determine, well, is there and that's to me the big unknown, is there a resurgence of the virus?
Yeah.
Because nobody's real clear on where the virus is.
Well, it's not just disappearing. We all know this. It's not like someone just hits a switch. We stay in our house for a month and all of a sudden it just goes away, all right? This is going to be, it's going to be an issue going forward.
But I think just some people I'm talking to, they don't get that.
Really?
They really think this is just a bump in the road. I'm like, no, I think, part of the road disappeared, and we're going to take a little while to find the rest of the road.
Yeah, that paved path is gone. It's a dirt road maybe from now on.
What's nice about, from the Forex side, and this is one thing I love about the spot market, no, I'm not poo-pooing the futures market, is that in the spot market, because you have such a volume of money, you don't have any big differences in the spreads, or if you've got a stock market, or I don't know, you might have seen it, let's see, it's been a week ago, I believe it was a week ago. Well, maybe not quite a week. I think it might have been last Wednesday.
On what currency pair?
I want to say it was the Aussie.
Okay.
There was a big spike on a 15-minute chart where it moved 120 pips.
We've seen a lot of that, though. I mean, lately we've been seeing. So yeah, I think that's what you're talking about. This move here. Is this you're talking back on the 6th, early morning, like midnight, 1 a.m.
Yep.
Yeah.
Now, when those happen, and you can also see it in the currency futures market, that oftentimes tells me you've got an institution that's in big trouble, and they need to raise cash. And when those big spikes come, it's a big challenge. That is why it's so important to have your stops in place.
Well, it's tough, and real quick, let's talk about that for a second. I wanted to talk about the British pound USD. We're already way past time here, but how have you adapted to this market? Because I showed the viewers an example the other day where the S&P, you go back 6 months, it was moving 25 points a day. That was normal.
Correct.
You go back to last week, it's moving 150 points a day. That's a huge multiplier. We're not seeing that quite extreme multiplier in the Forex markets, but it's definitely wider. How are you modifying your stops in that environment? Because you just said use stops, but are you making any tweaks at all?
No, I maintain my same risk.
Okay.
My risk is my risk. You start tweaking your stops, you've got to ask yourself, are you over-tweaking it? Are you under-tweaking it? Mm-hmm. Because if you over-tweak it, now you're agreeing to take more risk.
But we can control our share size, so we modify things that way, right?
Exactly. Now, futures, Forex, Forex is a little bit easier to control position size, not so much with futures because it's a higher incremental value.
Okay.
So maybe I have a small account and really all I can do is one contract. Does that make sense?
Yep.
Currency futures.
Yep.
However, if I was over in the Forex market, because I can do that in $1,000 increments, I could take, what I would do and have done is take half my normal position size.
Makes sense. Yeah, I mean...
But give myself a little bit more room for the range. However, because of trading currencies, I'm used to pretty substantial ranges, even though it got just insane the last quarter.
Nice.
I mean, generally the euro would move 100, 120 pips. We were down to 45 It was strange. It was almost like there was something cooking in the background that there was going to be a big boom.
Yeah.
Well, we got it.
Yep. I'll tell you what, we're running late on time here, but I want to get to some viewer questions here. This one came in from Jorge just a couple minutes ago, so I make sure we get to this one, and it deals with range markets. He says, "Question for you and Mr. Pesut. How do I deal with ranging markets, meaning sideways? Example, I was in a trade Sunday afternoon and yesterday in the GBP JPY, so British pound, Japanese yen. It hit my target, left my zone, putting me in the green side, but then returned against me in range and never left my zone. I ended up closing my position for a small loss since my stop loss wasn't very small to begin with. So I'll look at that one and see what we can see from maybe Sunday. I'll bring it up.
When was Sunday?
Go ahead.
This was Sunday?
Yep. I mean, Sunday you actually had some pretty big swings. I mean, that was a giant swing that happened on the rollover gap down on Sunday. Right here, guys, where you see the cursor, that's the rollover. So you had a nice gap down right into demand, and then that thing just ripped out. So I don't see it as being too sideways action there.
Now what he may be coming across is, when did he take the trade? So we were just talking about that big wick, that big spike that was on the Aussie.
Right.
And if you look at it, it's when markets overlap, where you may be rolling over into the London session,
right,
or you may be at the end of the New York session. Because I find that the biggest wicks happen is when the Asian session opens, or the Asian session starts going into its close when the European sessions open, and then when London. And I have a feeling that maybe his trade happened close to roll over the open, or close to maybe going into another session. So it would be really important from a Forex trader's perspective, see where your times are on those ranges. Because they will have a tendency to hang around at the top of the range or at the end of the range, similar time frames.
Right. I'm going to bring this one up here.
Which I've added to my trading plan, and I check, because maybe I think I'm at the top of the range, but that rollover is going to create an environment where instead of it dropping, it might decide to go outside of the range.
Right. Yeah, and that's why, I just brought up this picture here. You can find it, just Google, trader time zones, and you'll see it. There's a bunch of different ones. Some are much more visual, but it is important to look at this and understand that there are some periods that are going to be much more active because of the rolling over from one session to another. Generally, what you'll see in the middle of a trading session is where it's just kind of flat and boring. Think of it like a horse race. When you start off, a horse race, you've got that initial surge as everybody busts out the gate and everything's great. That may not be, what am I doing here? I'm going to sell full screen. That may not be the case in the middle of a trading session, right? You want to make sure that as you are looking for trading sessions, that the open's the most active, midday is usually inactive, and then so plan your trading session accordingly based off that. All right, Tim. I've gone way too long on stuff here. What's new? Anything you want to promote? You got any books coming out? Any sessions? Any classes? What are you doing? Anything I can promote for you?
Not yet, but soon.
Okay.
Soon.
Well, make sure I know about it. I want to hear about it. One last question. What's that?
You'll be the first to know.
Awesome. I'm looking forward to it. Natalia says, is Forex more susceptible to news? For example, politics and such, since it's politics, international economy, and trade?
It's a yes, no answer. Here's the no. You don't want to trade Forex on news. It's an absolute no-no. Because the firms set themselves up so that they deliberately widen the spread. You think you're going to get in at a certain price, but you get in at a different price.
Slippage.
My experience is if you're on a 4-hour chart, generally news doesn't matter. The big news drivers we're going to have now is going to be employment rates after things settle down, okay? Because in a regular market, if you will, the employment numbers last week probably would have set the market down 1,300 points
I agree. Yep.
in prior markets. Forex is more susceptible to what we call economic news. So that's going to be interest rate change, producer price index, manufacturing. But what you want to keep in mind right now, you should never, especially in this environment, be taking any kind of news trade because it's virtually unknown what that means.
Yeah.
We're in a way, we're going through a brand new rule book. Now, with that being said, I've in the past, and I'm still looking at it now, have used news merely as a momentum driver to get me to my target sooner or get to an area that allows me my trade to be activated sooner.
Right. Yeah, think of the news as kind of a fuel for the markets to move, but as pointed out from some of our guests out there, Harrison's right. Is most news is already priced in. We are so retail side of things that by the time we get the news, it's most likely already priced in. You got to be connected to get that news when it first comes out. You think that when the FOMC statement comes out that nobody knows those announcements? No, it's leaked out for sure, and that's generally not to us. So as Kev says, don't trade the news. I agree. I wouldn't be trading the news either. It's nice because it can tell you what the sheep are doing. What are the retail population doing? And, not to sound like a complete ass, but for the most part, we are looking to exploit people who don't know what they're doing. And people who watch the retail news, those are the ones that don't know what they're doing. They're looking for anybody to tell them what on earth is going on. Price charts tell you all that stuff. Kev, you're right. Supply and demand zones is where it's at. That's probably the best because that's where price has turned for a reason. People bought there or sold there for some reason. We don't know exactly what that reason is, but we can tell by the strength of those moves and the way that it looks what that move, how strong those levels might be. Tim, I don't want to take up any more of your time. Thank you so much for joining us. I look forward to, you sounded like you had some kind of announcement coming out there. I'm kind of excited about that one, but I won't pressure you to give us divulge any information. So I appreciate you coming on today, talking Forex with us, and looking forward to having you back on soon on our new format.
Perfect.
Awesome, Tim. All right, thank you so much. Have a fantastic day. All right, there we go. All right, Tim Pesut, guys. First time on Skype out there as well for us. I always loved having him on Power Trading Radio. We spent a lot of time going over profile and understanding who Tim was and kind of how he operates. So I spent maybe a little bit too much time there. But we got some insights into the Aussie, Canadian dollar, and British. I wanted to get to the British pound. Tim's got a lot to talk about, so I will try to bring him on more, and we'll just do a straight, look at some charts and analysis type of days. But I think it got a lot of you guys interested. I think that there was a lot of information that he gave out. The interesting thing that I'm seeing coming through here from some of the comments, when you're looking at news, you got to remember that the news's ability to manipulate a stock is super easy. I can manipulate a stock. I could manipulate it right now. Yes, SEC regulators, I could manipulate a stock and you guys wouldn't even know what to look for because the SEC is stupid. I've seen manipulated markets and they don't even know what they're looking at. So I feel that the SEC is dumb in their analysis of things and finding insider trading and manipulation. I wish I ran that department because I'd catch people every single friggin' day. It's easy to spot. I can manipulate a market like a stock market. I can manipulate Apple, I can manipulate Cisco, I can manipulate any individual stock. Manipulating an index is much harder because now I'm trying to think about manipulating the whole thing. Bond market, extremely challenging, and Forex, very difficult to manipulate because of its size. The people that are generally in the Forex markets are not you and me, and if we are in there, we are the smallest little fish possible. We're almost insignificant on the grand scheme of things as banks are transferring hundreds of millions of dollars back and forth and converting euros to dollars or dollars to pounds and pounds to euro. All that's going on. There is so much big firepower that to manipulate a currency market at that level, extremely challenging. To do so on an individual equity, that's an easy thing to do. So news is definitely an important factor out there. It can be a driver of price, but really look at supply and demand. When you have a major news announcement, look for wider supply and demand zones, and that'll be your key out there. Okay, cool. Thank you guys for the input today. I wanted to real quickly go and just mention that for tomorrow, That OPEC meeting got boosted. It was supposed to be tomorrow. Now that's actually looking at Thursday, April 9th. That's tentative as well. So that could create some havoc for the oil markets. For tomorrow, you guys are looking at building permits for Canada, which is expected to slide. No shocker there. You have crude oil inventories coming out for the U.S. Surprisingly, they're showing a drop in crude oil inventories. My guess is that's because production has come to a standstill in the U.S. We're supposed to go from 13.8 million barrels to 9.8 million barrels, so a decline of 4 million. Honestly, I don't even know which way that one's going to go. I don't think it's going to come close to 9.8 million, as they're always off on those announcements. You do have an FOMC meeting minutes numbers coming out tomorrow. What else? Anything that's really good? GDP numbers for the UK. So UK actually has construction output, goods trade balance. For those of you who are looking for currency trades, British pound would probably be one of the more active ones out there tomorrow based off the news that I'm seeing. All right, Brendan, made $600 today. Awesome. Congrats. Sorry I'm late. Well, it's always nice when your trading makes you more than your day job, right? That's the beauty of the markets. So cool. And Franco, welcome to the show, my friend. Brendan says, hope oil goes down. I'm still short. Well, you and I are going opposite directions, my friend. I'm long crude oil. So you and I can just battle it out emotionally over the next 24 hours until I see you on the show tomorrow. That'll do it for today, everybody. Again, hit that like button if you like today's show, if you like Tim Pesut and want me to continue to bring him on. Hit that like button. Also, the subscribe button on our front page is probably the best thing you guys can do. I know we're slowly picking up subscribers. I'm a little surprised it's taking me so long to get to 1,000. We've got like another 150 before I can get this to 1,000. Then things can change for me personally here on this program. So hopefully we can get it up to those levels. So if you got him out there, spread the word about the show. Tomorrow we're going to have Steve Moses on the program. We're going to talk options. I saw an options question that came through today. I think that was for my friend from Hattiesburg, James. I think James, long time ago in this chat, was asking about options. James, if you're still here, ask that question tomorrow, because I will. Yeah, there, James Lovelace. I'll forget. But Steve Moses will be the guest on the program tomorrow. We can talk about that deep out of the money option strategy we talked about on February 19th, right before all the crap hit the fan. So if you have options questions, want something discussed, I'm going to do a similar thing. We will talk about a trader profile. The reason I'm doing that is I want to take those segments out, put them on my YouTube channel. So if there's a guest in the program and you guys may not have seen them, you can simply go to the profile, click it, and it'll give you a little understanding of who they are, how they trade, etc. So that's the goal of doing those market profiles for each of our guests. Okay, cool. That will do it for me, everybody. Thank you so much. Again, hit that like button. If you have any questions, you can go to tradermerlin.com. Send in your questions there. It's very, very simple. You just click the button, send in a message. I will get to all those on today's on that program, or as soon as I can. I will be doing a Q&A session again on Friday. So I guess here's the news for the guests for this week. We will have Steve Moses tomorrow, David Warner. So we're going to get a double dip on Forex this week. David will be on Thursday. Very excited to have him on. Just a beast when it comes to the Forex markets. And then I'll do the show solo on Friday, cocktail in hand for sure, to cheers this week. Again, hope you guys had a fantastic trading day out there. I look forward to seeing you guys on tomorrow's show. Happy trading, everybody. I'll see you tomorrow.